Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is down. Market's been tumbling this week. As you can see here, market is down about 1.1% today. And Nasdaq is down 1.3%. Dow about 0.8% there. At one point, Nasdaq was down as much as 2.5%. So we did see some bounce throughout the session today. VIX is actually down along with the equities today, and we've been seeing some strange things happening with the VIX market. You know, I remember when VIX was like going up with the equities here, and then as the equities actually tank, VIX really haven't seen any kind of a bounce. We're just been flattening out. We'll talk about that. Gold is up slightly. Bitcoin is down about 1% there. So I think, you know, at this point, biggest question most traders and investors are asking right now at this level is that, well, are we going to see, is this a good level to accumulate, right? Is this the level that where we potentially could see a bounce? Possibly this market going to the new all-time highs, making new all-time highs, or is there going to be more decline coming in the market? We're trying to find that out, answer that question in this video. It is all coming up right now. So let's actually get into the 65-minute chart on the S&P, right? And then we'll follow up with some of the things we've been talking about this week on the daily videos. And then we'll come back to the daily chart and look at a more overall picture. So let's talk about the daily chart, or 65-minute chart here on the S&P. As we can see here, we talked about yesterday, this is going to be the level of support, right? It looks like, you know, that short-term moving average, you see that short-term moving average coming down, that squiggly line there that acted as a resistance this morning. Looks like, let's see, 1, 2, 3, 4, 5, 6. So it looks like we actually gapped down slightly on the S&P. I think Nasdaq actually gapped up. Because when I actually go to Nasdaq here, you can see this is today's move. Actually, Nasdaq gapped up here. You can see that we talked about this island top reversal, right, on the yesterday's video. And looks like this is where it closed yesterday. We gapped up. And the buyers trying to fill this gap. It would have been better if they filled it. Well, they didn't fill that. That island gap still remains open. And from that point on, it's just came straight down here. Let's actually go back down to Spider though. So looking at the Spider here. So Spider actually slightly gapped down. And then it continued to puke to the downside. And we broke below this support of 332. And we found support here at this gap area, which was open back in August 8th. As you can see here, August 8th, this gap, it was a small gap, but nonetheless, that was a gap. And we haven't gone back here to this level, which is 328 level. It took almost like month and a half, right? Month and a half to go all the way up here to 360. Come all the way back down, finally retested it, and then we saw some buying activities there on the last couple of hours, and you can see we came near to this prior support as potentially a new resistance. So looking at the price action itself, you can see my midterm moving average is still declining. My short-term moving average is here. My long-term moving average is pretty much sideways, I think, at this point. Kind of sideways. Still kind of rising, but still kind of sideways. You know, and so we'll just see how that plays out with my long-term moving average. So I'm going to label this market short-term still bearish. But we've been bearish pretty much this entire time since the fall, right? I haven't changed my short-term sentiment this entire time. It's always been bearish in the short term, despite the fact that there are some days and weeks where we did see these kind of move, but my short term sentiment for this market, I've been labeling it bearish despite the fact that we saw those up moves, right? Because the sentiment has shifted. The price was not able to capture the midterm moving average. It was hovering below that area, and also talked about we're dealing with that kind of extended levels on the longer term picture, because the market just went from 220 to 360 in 5 months, performing about 65% move on the S&P. We talk all about that in the last several weekend videos. With that price getting below my midterm moving average, I've always been bearish in the short term. Now the problem is now we made lower low. So you see that? That's a lower low. So we do have a series of lower lows, right? And potentially some higher lows here. And so that's a problem. That's a problem that for the buyers that we did cultivate lower low. So I've been kind of neutral to bearish in the midterm. I don't want to quite give it bearish yet in the midterm, but I'm going to label it as of today, as of this moment, neutral to bearish in the midterm. There's a reason why I'm still kind of being neutral, because I still think, I'll go back to daily chart and you'll know why. So I'm still neutral to bearish. So I'm neutral to bearish in the midterm. Not quite want to give it bearish yet. Long term, I'm bullish. Obviously, that hasn't changed for months now. Let's check out that oscillator here real quick. So that oscillator, we just found that support area, which is that oversold level, right? And we're starting to cross up here. We haven't crossed yet, but they met. They got separated here, crossed down, and now they're trying to cross back up here after the price found support right on that gap area. The problem is we now have to deal with this pivot here, potential resistance. We got this midterm moving average curling down. We got the short-term average there. And not to mention, we got the long-term moving average that had been acting as support. So we're going to have all this vicinity right here, right? That's all resistance level. All this level is going to be acting as resistance. So for me to turn bullish in the short term, I will need to see the price getting well above 342 and then start cultivating higher low. It's important that we see that cultivation, because how many times do you see a market poke his head up and drops like this, and then that shenanigan, right? That trap. That's what you need to see, a cultivation where it goes up and you see that midterm moving average rising back up, and then it comes down. It doesn't come all the way back down to the lows though. It comes down, stops short, and then makes higher low. That's what we want to see. Until then, I'm going to be bearish in the short term and neutral to bearish in the midterm. So we got something here. What it tells us is that bears are tired, sellers are tired. The problem is the buyer's going to utilize this and bounce back up, potentially getting up here and filling this gap. I think that'll be the best case scenario going into next week, filling this gap here at 339. Problem is, once the gap gets filled, that midterm moving average is residing in that vicinity. That's a double resistance. So I've got that midterm moving average, we've got the gap area in that vicinity. So we're kind of working with kind of a bearish downtrend in the short term. So this oscillator, because when the market is in a bullish uptrend, right? When you see this signal appearing, likely they're going to have a smooth ride up to the upside, or maybe some kind of a bullish divergence or something like that. The way you analyze the market, looking at the oscillators, it's going to be a little bit different now. Because we're on a downtrend in the short term, I won't be surprised to see this thing getting up here and then and then start curling back down, where then trend can continue lower. Something like that. Like even this one here, it didn't go all the way back up. It stopped short in the middle and then it pulled back down. And you can see that was this move right here, where this could do the similar thing where it makes an initial move, but it pulls back down and then makes lower low on the price, where it finds resistance somewhere in that vicinity. So that's the different thing. When the market is in an uptrend, a lot of times what's going to happen is with the oscillators, when they do see a full cross, they usually go all the way back up, usually on top of its band. And that trend continues on like that, but we're on a downtrend, so you have to look at it differently. We can analyze this market differently. Let's actually go to the daily chart here. So this is a reason why I'm not giving it I'm not labeling it fully bearish in the midterm, is because I understand where we're at on the daily. We're right at this level, right? We talked about this last week also. This midterm moving average on my daily chart, it has impressive resume, because back in late June, early June, May, throughout April, it acted as strong support, right? Not to mention in June, from June lows to the August highs, right? That's a 20% run in just about a month or so, right? Just actually 2 months. In 2 months, 20% run. That's a big run, right? Because sometimes S&P takes entire year to make 20%, but just to make 20% move in just 2 months is a big run. And it all happened right on that midterm moving average there. And right now, not only we have the midterm moving average right in that vicinity, we got small gap. That's the gap, this gap right here. And you can see it better on the 65-minute, that gap, right? So we go to daily chart. That's what their gap is. So that's kind of what happened today. We actually got slightly below my midterm moving average, hit that gap area, price closed above my midterm moving average right now. So this is the reason why I can't fully label this market bearish in the midterm yet, because we may see a bounce here because it does have some weight. We cannot ignore the fact that last several times we found some strong support. So when you just look at technical perspective, you may wonder, well, this might be a pretty good level to find support. Okay, we may continue higher and make new all-time highs. Normally, yes, I would agree with you. And as you guys know, I was buying here, I was buying here, I was buying here, I was buying here. And I'm here to tell you, I didn't buy it here. I didn't buy it here, and I haven't bought here yet, because we are working with the extended market in the overall picture. Remember, market just went from 220 to 360 in about 5 months, right? That's what, 65% move? Yes. So that's a 65% run in just about 5 months there, right? So we were dealing with pretty overbought sentiment overall. And so psychologically speaking, at this point, I think there are too many people still looking to capture this. And a lot of those people who missed out this rally or who've been bearish this entire time, now they want to be bullish, right? They realize that a lot of these, they start to realize a lot of these indices are recovered already. We're back to uptrend territory, right? And so they don't want to miss out. They already missed out 65% run. They don't want to miss out. And so I think a lot of people are very hasty to jump in. And you know how the market is? Market loves to punish those chasers. And so how I am dealing with this market is not having anything new here. I haven't accumulated any new positions. I'm still holding my long-term positions. And as you guys know that I've closed out all my exotics up here, right? My exotics and my aggressive longs. But my long-term positions, right, such as index fund, some of the long-term holding shares and things like that, I'm still holding those. So I don't mind at this point if we do see a bounce here, but I haven't picked up anything aggressive. I haven't picked up anything exotic yet. It's because I kind of feel like this is a level where you want to be cautious. I mean, if you want to get in it for long term, and you don't mind maybe potentially another, let's say if the market comes down from here, another 7% or so, you know what I mean? That's not a huge drawdown if you're long term, right? If you're buying index fund, if you're buying just straight shares to hold several years, 6%, 7%, 10%, maybe even 12% drawdown isn't bad. Problem is with exotics though, right? You're gonna buy call options here, and you see a 7% correction on the S&P. Well, that call option depends on what kind of strike and expiration. Well, you're gonna lose 50%, 70% on that position, right? If you get into triple shares, well, we see 10% correction on the S&P. Well, you're gonna lose 30%. So, you know what I mean? So it's getting a little bit trickier to start getting into exotics at these levels, anything aggressive, right? So that's kind of what I'm waiting on, is that how this market is going to behave first before I getting into those. But I am still leaning towards, even though we are seeing this level getting retested, right? I am still neutral to slightly bearish. It's neutral because I'm not sure if we're going to find the support here. I'm slightly neutral to bearish in the midterm is because just what I've explained to you, psychologically speaking, I think people are too excessively bullish. And when they start chasing, when things get too crowded, this market likes to flush them out first. And I'm saying this is a possibility before this market makes a move, right? Because we're dealing with the extended kind of overbought market, looking at things as overall, looking at things from the March lows till, recent peak there. So that's what I'm getting at. Another reason is we may see a bounce here and we make new all-time high or something like that, or poke his head up, and then all of a sudden that becomes some kind of a trap, turns into some kind of a double top here, and then we see pretty furious sell-off from that point, and that could bring us down pretty hard to 300. So there's much more risk here, right? You want to be greedy when people are fearful, and you want to be fearful when people are greedy. I was being greedy when there's tremendous fear. I was buying all of those levels, right? Now I'm being fearful, closing out my exotics and aggressives as people are being greedy. So that's what I'm on. Even if we find the support here, I'm not sure, man, if that's going to just continue higher. We go to 400. I think even if we do see a bounce here and go to all-time highs, that could inevitably some sort of shenanigan trap, which that's what I think is going to happen throughout the month of September and October. Potentially even after the election, but September, October, definitely going to be some tricky environment we're entering into. So that's where I'm at. Market is never black and white. I cannot tell you, yep, don't worry about it, man. We're going to 400, just buy I cannot tell you that. Nobody can. But I can't even tell you, don't even worry about it. Exit everything, buy puts on everything. Going all in and puts. We're going to 300 for sure. Mark my words. I cannot say that either. But I've just explained to you how I am approaching this market, right? That's what you call portfolio management, risk management. And so I'm still long, by the way, right, with my long-term positions. By any means, I don't believe we're going to see some kind of a 2000 dot-com crash or 1929 Great Depression or this thing coming all the way back down retest. I don't believe any of those scenarios. Worst case scenario, I think, and I said this before, currently S&P's suffering a 7%, 8% correction. I think worst case scenario, 15 at worst. That will take us about 300 or something like that, right? I think that will be at worst, but I think 12% is pretty ideal. right? And that's kind of, I'm trying to figure out, are we going to start coming back down here now? Are we going to make new all-timers first? How is this going to market behave going forward? So I'm being fearful while there are a lot of people are being greedy at this point. And I can sense that so many people want to chase this because they are rushing into it because they missed out. And there's great FOMO going on that they don't want to miss out. They don't want to miss out. They already missed out this much. They already lost money shorting this entire rally. Well, they want to go long now. But the market is a brutal machine. It wants to punish them in some ways because market punishes the chasers and rewards the risk takers. And, it's market never makes it easy. I guarantee you right now, this pullback is not scaring anyone. This pullback ain't scaring anybody. But let's say markets start coming down to like 300 or something like that. It's going to start to look scary. You're going to start to hear things from social media, mainstream publications on TV and all that. You can people are going to start coming out and say stuff on TV. They're going to start coming out and say certain data about why this could lead to a .com crash or some kinds of stuff like that, looking at Nasdaq or looking at some of these tech stocks, and it will be extremely difficult to buy that dip. And that's many times is right time to buy. Do you think it was easy when I was buying these dips here? No. It was extremely difficult, especially when I was buying in March lows and April lows. It was not easy. It got a little bit easier for me when I bought this though. And we talked about it, right? I mean, I'll put that video when I was talking about the June lows, that pivot right there, just right on the money, right? Not only that, my midterm moving average. And my midterm moving average already held pretty good resume here. So buying the June lows wasn't hard for me, writing this. But man, March lows, April lows, and March lows, April lows were pretty difficult. Same with May. So March, April, May was difficult. And then we saw a move pull back. Buying these dips weren't as difficult. Now, people who missed out this entire dip, now they want to buy it here. Now I'm being fearful. You see what I mean? So let's see how the market deals with it next week. I will still be cautious. Maybe refrain from these exotics, right? And next week we'll get a little bit better idea and see how this market deal with this level here. Let's go to Qs here real quick. Qs, same way, similar here. We are, for the first time now since the April, hitting my midterm moving average there. We're just trading around in that vicinity. My short-term moving average is curling down. It's the first time though. You can see my short-term moving average, short-term moving support for like 4 or 5 months. And now it is acting as a resistance here. So a little bit more cautionary signal there in the short term. I depict few of the potential support levels at 251 and 237. But again, after this kind of move, this what is it? What are we doing right now? 12% pullback, right? I think Nasdaq is suffering a 12% pullback. Yeah, 12% pullback after what? Like 80% move since the March lows, right? Yeah, 80% move, and we're seeing a 12. There's no fear yet. There is no fear yet, I don't think. And so, and it's a mentality right now is that people are thinking, yeah, you just keep buying the dip, you make money in this market, and market does not like that. When you start thinking that it's easy, you know how people say stuff like that on social media, it's easy money, man, you just buy that dip. They are the same people who didn't buy anything this entire rally. They're just saying that now. You know what I'm saying? So that 12%, after 80% move in 5 months, that 12% correction is not scaring anyone. You want to feel the fear. That's the level you want to start accumulating pretty aggressively. When you start to feel that fear, back of your spine, man, it's scary. It's freaking bloody red. Everybody's freaking out. That's the time you start thinking of. Right now, no. We don't have that. Everybody's very complacent still. Still a lot of people want to just buy this dip. And you know what I mean? Because this market has been complacent. Like, is this market conditioned that complacency? You know what I mean? This market basically spoiled everybody. It's like, yeah, man, I'm just gonna buy. Yeah, man, it's free money, bro. You just keep buying. We're on 400 on Nasdaq Qs. We're gonna go to freaking 360 in no time. You start talking like this. You start acting like this with this kind of attitude. This market will slaughter you. Let's go to Diamond. Diamond hasn't advanced. We haven't made a new all-time highs yet, but it caught up quite a bit. We're retesting this level here. My midterm moving average also. It's a pretty obvious pivot also. I mean, I like to see this thing break lower, create some panic, right? And create some fear, like people want to start like freaking out, right? But this is a level, again, so we are at support. You can see even on the Dow, we're hitting this support level. We looked at Spider and the Nasdaq Qs, also hitting that midterm moving average. So we may find the support. I just don't know if it's going to last that long. Or it's going to produce some kind of a trap. And I tell you this though, before I go to VIX and gold, it will be better. If you really want to accumulate in this market, it will be better if we start pulling back from here. Like maybe little get up and pull back, you know, so you can maybe accumulate, maybe build your portfolio to the long side. It's going to get difficult if we come up here and make new all-time highs. I'll tell you what, it's going to get difficult. Because if we see another higher high, new all-time highs quickly, and you're going to see a lot of people jumping in, especially after making another new all-time highs. I cannot guarantee what this market is going to do. We could see some kind of crazy, like, you know what I mean? Like something that could make things hectic. Not only remainder this year, even possibly early next year. So it would be better if we see a little bit of hope get up and maybe see further decline for this to kind of, you know, graciously make new all-time highs and potentially get into an uptrend. But we start going up here and making new all-time highs here, and this market trapping even more longs, new coming longs. Yeah, I think it could get ugly then, because we're already dealing with that extended market. Let's go to VIX. So VIX been actually not been moving with the market. You can see market has been actually coming down, and VIX weren't able to find any kind of traction right now. But we talked about it on the last week's video. That midterm moving average is here. It's funny how we are above my midterm moving average on Spider, but we're also above my midterm moving average on VIX. So that tells us that that's the sentiment we're dealing with right now. So this is a level where we may find support on VIX. We may find some support on VIX. So keep that in mind. Let's go to gold here. So I still haven't accumulated anything on gold since I've liquidated all of my longs near the top there. Actually, I start accumulating. I start distributing here and here. That accumulated back in before COVID, like back here and here and here, and I'm just waiting what this. Obviously, because I don't have any positions on gold, I'm waiting for the sit. I like to see a steep pullback so I can accumulate again, because I am bullish in the long term. I just think that we're extended on gold and silver and miners. And if we do see a further correction in the equities, I think gold and silver is going to kind of go with it. Lately, they've been kind of going together, but we're holding above this midterm moving average here, and that's a bullish. If you're holding long, I mean, despite only time that we broke below, you know, my midterm moving average was that COVID decline. But you know, let me get rid of, you know what? Let me get rid of all these drawing tools for a second. So you can see ever since we kind of broke out here, only time we broke below my midterm moving average was that COVID decline. But ever since then, we've been hanging above my midterm moving average here, and we've been kind of seeing these kind of consolidation pattern, right? And I like to see consolidation patterns after it breaks out, but when you're still dealing with the extended market, a lot of times these consolidation patterns can be dangerous, right? Because we are crowded up here. And again, I mean, sometimes they do continue higher. I'm just saying the odds are catching up against the buyers if you look at things long term. Because I mean, if you look at gold, you know, made a pretty big move. You can see maybe if this is a low, I mean, that's about 72% move there. And that's a pretty good move. And in silver, much more. And we haven't retested my long-term moving averages yet. You know, it's thinking maybe we'll see that. But there isn't any kind of a topping pattern that I see. Though I see some of the weekly indicators. I'm just looking at my other screens here. Some of the weekly indicators are kind of rolling over, but price been pretty adamant. So I'm not bullish. I don't have any positions, but chart itself looks bullish. I just think the odds are catching up though. And this is time like you want to, you know, reduce your risk to the long side. Let's go to the Bitcoin. I'll let you guys go with this. So Bitcoin, I'm still long, by the way. Bitcoin looks like we found support here. Pretty obvious level. And what happened was we have a gap now. So we got this gap, little gap here. We got this gap now. And we still have my short-term moving average declining here. So we have to see how this plays out. I mean, we have a higher high. We talked about it last time. We got the higher lows, right? But we don't know fully yet if this is a fully higher low. For us to know that this is a fully and higher low is this thing goes up and make another higher high. We don't know that yet. This may come down. But good thing that we saw a gap here. So that gap is going to provide some support. There's another gap here at 1054, 1086. That's where we found support there. And it's been grinding higher. So potentially we hold this up. The worst case scenario, if the market decided that there are too many chasers up here, it may break below it, create some more panic before possibly going higher. We'll see how it plays out. We'll check back next week. We'll go from there. Well, there you have it. I think this is a level that you want to be cautious, and I think you don't want to be too aggressive here. We are at the support on the S&P. A lot of people are asking the same question. Is it time to accumulate? And a lot of people asking me that also, and I don't answer that question just because everybody has a different time frame. I mean, when you say, can I accumulate? Are you going to hold that for 5 years? Or are you going to hold it for a year? Or are you going to hold it for a month? Right? So you have to understand your time frame because it's all different. If you're going to hold it for a couple of days or a week, maybe not bad. If you're going to hold it for a month, you know, I mean, so you kind of have to know where like, what is it trade for? What are you going to be buying? Are you just going to buy an index fund? Are you going to buy Spider index fund? Are you going to buy actual shares of equities? Or are you going to go long on Spider? I mean, what kind though? Are you going to buy leaps expiring next year? Or is it going to be weekly? Is it going to be monthly? So you see how when some people ask me like, okay, is it time to accumulate? Depends on so many different variables. And so I do not answer that kind of question. Because for a day trader, yeah, any day, any minute is good time to accumulate and sell. So what I'm saying is if you're a longer term investor, maybe it's good to wait around a little bit and see where it goes. Maybe if you're more short term, you may be trying to take advantage of this for short term though, but again, we're dealing with that extended session, so it's a little bit more risky, and I think we're not going to see something like that. See, a lot of people missed out. That's what happens is in the market is people miss out on a big move already, right? And then they wanna capture that. They wanna make sure if that happens again, they don't wanna miss that out. So they aggressively go long, thinking they wanna see another move like 20% move in like 2 months, right? And a lot of times market won't give it to them, and that's what I'm saying. So I wanna be cautious here. I'm still bullish in the long term. Midterm neutral to bearish, short-term bearish, right? And next week on Monday, we'll come to the market, we'll figure it out, we'll go from there. Enjoy your weekend and good luck trading next week.